or they end up running into speculative markets. And the speculative markets are easy to understand. Someone just paid more for X than the other person did. Therefore, there's a trend line. It's going up. It's like playing roulette, and black keeps coming up, and you're like, okay, it's going to be black again.
It has to be black. There were 7, correct?
There were 7 blacks. And so I think that that's a really important kind of takeaway for folks that might be new as investors.
We're all susceptible. We're all susceptible to this. Like I was just looking, at my own performance coming into the end of this year. And, I did a lot of SPACs this year, but I also did these PIPEs, which are these third-party deals.
Private investment in public entities.
Exactly. Other people's deals that they were bringing to the market where they said, Chamath, do you want to be a part of it? And, and I did. And part of it was I was looking at these things and, Friedberg, doing my work. But in the end, it turned out I didn't do nearly as much as I probably should have, because I ended up sitting on top of other people's work versus the original or underwriting that I would do if it was my own deal itself, right? Anyways, the net of it all, it's like, that was very inefficient capital deployment. And as I look at it now, it's like, I'm down, I'm technically up 19%, but that's really because of one deal. If I take that one deal out, which was a total outlier, I'm down 17% on about $200 million of investment.
When you were a fast follower, not the originator, it wasn't your idea. This is critically important. There are many different ways to make money, but you have to specialize and you have to have first principles and your knowledge.
I trusted other people. I did the same thing that I'm saying to other people not to do. Do not just copy other people. You have to do your own principal work. And even when you do your own principal work, it may not be enough. And you have to be willing to basically see the forest from the trees and walk away. And so all these PIPEs, I'm in the midst of sort of cleaning up and selling down, and they've been just a kind of a disaster for me.
Hold on. I want to build on this for a second, because I think it's critically important what you said as well, Friedberg. You have to be comfortable with the investment you're making. I look at these companies and I look at the underlying customer, the product, and what kind of revenue it's going to generate. And people thought I was dunking on Rivian yesterday. And I said, listen, when Tesla went public, people forget their valuation was $1.5 billion.
1.7.
Okay, so $1.7 billion when they went public. Now, they already had thousands of Roadsters, and they had already had the...
No, they had 93 million of revenue in year one.
So this was dramatically different than what Rivian had. Rivian is being valued at, whatever that is, 120 billion, I think, yesterday. Rivian has 17 billion in cash. Somebody asked me at the poker game last night what I value Rivian at. I said 17 million in cash plus 3 billion, double roughly what Tesla's was. The market's hotter right now, whatever. But I put them at 20 billion, and people were giving me a hard time about it. I said, I think that's actually the realistic valuation for this company. And we are in a very dangerous moment in time right now where I think people are, whether it's meme stocks or crypto or NFTs, suspending disbelief, in some cases SPACs, because they're not all created equal. And certainly in private companies, we're seeing this, where people are giving people an amount of credit which makes no logical sense and is getting further and further disconnected from reality. So as an investor, you have a choice. Either you have your fundamentals, which I'm not going to change my fundamentals. I'm going to focus on the fundamentals that got me where I am, and I'm not going to be involved in a $100 billion market cap company that hasn't launched a product yet, let alone a $120 billion one. I'll stay focused on startups.
Yeah. But what you're saying is also important because you're highlighting how you value that company. You Correct. Individually said, I think that company's worth some multiple of how many cars have been sold in the past. Elon sold, thousands of cars. He was worth 1.7 billion. These guys have sold. And other people are coming in and looking at this company and saying they've built facilities, they've built assembly lines, and they've got pre-orders and bookings for lots and lots of cars down in the future. And clearly they've gone in and, some people have gone in and seen these plants and seen these cars actually working. So, it's really important to take note that your point of view is one point of view in a very diverse market with many points of view. And everyone's going to come into this market. And that's why, unless you individually as an investor have a strong point of view and can show that you can apply your unique insights to consistently beat the market making decisions, investment decisions like that, you're eventually going to lose because those other points of view will be a bigger view of the truth.